Thank you so much for joining us today here on a Monday. I'm Marlin Bohling with you, and the markets are open, and they're behaving badly from the perspective of producers out there across the country. Let's take a look at this corn market here and see what the market is doing right up to the moment. These quotes are provided by a bar chart. Okay, on corn, a little bit ago, we had them testing going down 30 cents or so in September. Right now, they're down 26 1/4. We're at 656 1/2. Now, I'll back up and give you July. It's down 17 3/4. If you recall, July options went off of the board last Friday. So they expired. We got rid of those, and July is just kind of in no man's land right now. Your December new crop corn is trading 26 3/4 lower at 647 1/4. That's 3 cents from its low of the day. Boy, they are punishing the corn today. On soybeans, we now have the July down just a 1/2 cent, but your active August contract, it's down 4 1/2 at 15.16 1/4. November down 2 1/4 cents. We're at 14.22 per bushel. And moving on to our wheat market here so far today, we have Chicago July down 4 1/4. September down 4 1/2 at 9.32 per bushel. In the Kansas City market, we now have July dropping 7 1/2 cents at 9.85. There for a while, we traded higher after the open and then did an about face. September down 6 3/4. In Minneapolis, we now have July trading 12 3/4 lower at 10.58, and September down 13 1/2 cents right now. All kinds of pressure going on here in the grain markets, and here to talk about it, we welcome aboard Mr. Chris Swift of Swift Trading. He's based in Nashville. And Chris, good to have you on board once again.
Yes.
Sorry, the markets are in a free fall here this morning for some reason, but maybe you can explain to our viewers why they are doing what they're doing.
Well, I wish I could, but I think it has to do with some parts of the U.S. got a little bit of a relief in the moisture this weekend, and some of them a little bit of relief in the heat. And the differences between the two just make for the corn crop just not all going to be horribly bad right now. So I think it's volatility. It's summertime volatility.
So what happened to all that talk that we have zero room for error? We can't lose any bushels out there. And yet, you know, we have this report coming up Thursday where we could learn we maybe lost 1 million acres of corn, maybe 2. And conditions are not perfect across the country. I mean, some folks got rain, some got some good rain, some got too much rain. Some got frozen rain,
right?
But some didn't get any. And I've seen a lot of rolled up corn. So is that justified, seeing a drop like this in the market?
Well, when you talk about being justified, nobody really knows what that is or not. But I always look at it, before that error can be released, you got to pull the bow back. And so what we're looking at is probably we're having to have a little bit of pullback before we can move forward and just make some adjustments. There's some farmers that needed to make some selling. We've kind of dried up a little bit on our exports a little bit. And we also note that last week some of the other countries had cut their mandates for ethanol production. So we're getting some new factors in again that's going to probably create more volatility and less direct price direction.
Okay, and we'll come back in just a moment, and we'll take a look at our livestock trade as well. By the way, we had a cattle on feed report that came out last Friday. We'll discuss that and its possible impact on today's trade when we come back. All right, we're talking to Mr. Chris Swift of Swift Trading. He's based in Nashville. Now, I want to talk about the livestock trade with Mr. Swift, and we had a cattle on feed report.
Yes.
It came out after the market closed Friday, so the trade couldn't do anything about it. Yeah. And when we opened up this morning, feeders were on a bit of a tear this morning.
They were.
I want to look at the numbers from the cattle on feed report and get your take on this.
Sure.
Here they are. On feed, as of June 1st, 101% of a year ago. That was pretty close to the trade guess. Placements came in at 98%. Now, the trade was looking for closer to 100%. They had 99.7. I'd call that a little light, right? Marketing is 102%, while the trade was looking for 103. What does that mean?
Really, the number of cattle on feed is pretty interesting because we know that those don't include cows and bulls. So we know we have an elevated cow kill, and we're still carrying over 100% fed cattle supplies. So those are pretty damning. And for the month of May, having a 3 or 2% increase in the slaughter is not really anything dramatic because we need that for the general summertime demand that we have for the beef.
Now, is there any leftover impact from that cold storage report that we had last week or not?
I don't think so. Month over month, it was down just a little bit. Year over year, it was up pretty significantly, beef and both beef and pork in the freezer. So it is bothersome anytime we start building on supplies there, and especially since our exports have not been just roaring out the door.
Well, with the free fall that we are seeing in the grain markets here this morning, let's take a look at our live cattle futures, and we'll see what's going on here. We are a little higher on live cattle, not by that much. And it's kind of interesting here, Chris, because the deferreds are showing the most strength. That's not necessarily a bullish sign, is it?
Well, not necessarily, but what it kind of really looks like right now is that as we continue to place more cattle on feed, that in the future we'll have fewer of them. And I think that's what a lot of the trade is looking for. Is somewhere down the line in the end of the third quarter, first of the fourth quarter, we're going to start seeing dramatically lower placements.
Ah, okay. So right now, the August contract, if we can bring that back up on the screen here again, the August, is that where most of the volume is today?
It is, because June's fixing to go off the board in a couple of days. So.
All right, good. So August is 42 cents higher this morning. We're at 133.80, and the October now 47 higher. We're at 140.22. The feeders had a big open this morning. I want to take a look at the feeder cattle trade. August up 270. Last time we checked, it was $3 higher. Right now we're at 175.20. September 232 higher at 177.40. Now this is the other story. It's higher on the nearbys on this.
Right. Corn, I think a little bit lower corn.
Okay.
And I'm not real sure that what we've not seen is any kind of break in input costs that have helped the cattle feeder any. So we see the jockeying back and forth, but in reality, there's not much change in the margins at all.
All right, let's check out our lean hog trade. And we currently have the August contract there, half a dollar higher at 107.27. Boy, it really cooled its jets from its open. We have come off of that by almost $1.50 now. The October contract 20 lower, and the deferreds are actually a little bit weaker. If you go way out there, February is down 77 cents. So still kind of a split decision on lean hogs. I don't think they know who to follow right now. Kind of a confusing trade. Anyway, that's the latest on the livestock trade. Chris, thanks for coming in.
Always a pleasure, Mark.
As always, glad to have you here. Look forward to next week. Chris Swift of Swift Trading. Janet, I'll turn it back to you.